What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 31st of 2018. Well, folks, as you can probably tell from the video, I'm back home in the US for the first time in over a month. It feels so good to be back home, guys. I'm back in the swing of things, but I had a great time over the month of July. I not only got to visit some of my favorite places, such as Switzerland and Ireland, but I also got to have a variety, or attend a variety of different cryptocurrency conferences in Lithuania and Bangkok and Thailand. So I had a great time over the month of July. But as we get back in the swing of things, we've got a lot of things to talk about here on the daily update. Not only are we going to be spending a decent amount of time talking about the recent price action of Bitcoin and some key levels of price support that I'm looking to see if Bitcoin will hold over the next 24 to 48 hours. But along with that as well, we've got a lot to talk about in regards to the FANG stocks and traditional markets, the big tech giants of the NASDAQ. With the recent drops we've seen in Netflix and Facebook, we've got another large tech giant coming in and reporting earnings this afternoon. So I think it's going to be a make or break moment for the NASDAQ and could lead towards a longer term downtrend over the next few weeks. So we've got lots of things to talk about. Let's not push it off any longer and dive right in to the daily update. And I do apologize as well if you guys can notice my voice is a little bit raspy. I've been conferencing over the past few weeks, not to mention I'm on a 12-hour time change on my flight back. So whereas it's 11:58 a.m. at the moment, just about to hit afternoon, it's actually 12 at night for me. So let's see if I can do this daily update. Bear in mind with me that I'm a little bit out of it. So anyways, going on here to talk about the overall market, we can see generally Bitcoin is almost down around 5%, repeating not only the price action we saw yesterday, which most of it we had recovered, but also testing towards some lower levels. And I think this is actually healthy for markets. This is testing something we talked about back when Bitcoin had broken past a very key level of resistance. But before we dive into the actual TA for that, guys, for the most part, the entire market is down except for Binance Coin, which has a mind of its own, as well as Verge, which has recently had, I think, some exchange news, which has led it up in the market. So for the most part, Bitcoin is down. Obviously, altcoins are following, and because of this, we have seen altcoin dominance deplete, whereas Bitcoin dominance has risen. But still, even in this market where we're starting to see a little bit of a dip here, we've declined a little bit in valuation. We're still well above $250 billion, which is all I really care about in the short term. But going on here to market dominance, what are we looking for here? Well, I think, again, Bitcoin dominance is going to retest 50% here. We've been talking about this for the past few weeks. Not only that, but we'll also see other coin dominance probably come back down towards its level of support around 17% here. I think that would be, again, a key sign of a double bottom for other coin dominance. We could also see altcoins finally start to get some momentum in the market comparative to Bitcoin. But we're not going to see this until Bitcoin gets a continued stretch. Now, I know a lot of people have been panicking with probably the past few hours of price action. Again, with Bitcoin being down 5%, people tend to look at the negative, and people don't care so much about the positive side of things. But this is exactly what we've been talking about for more than a week now, guys. Ever since Bitcoin broke past this line of resistance that had been holding down the price all the way back since in January, a very key bullish sign for Bitcoin. We needed to see the previous resistance becomes new support. It's an old saying on the channel, but it is so true with markets, especially cryptocurrencies, and especially in continuing these longer-term uptrends, making sure that this isn't some short-term bounce up to the upside, a more facilitated long-term uptrend for markets. So again, we talked about it back here. And not only have we seen the correction back down towards this line of resistance that was holding Bitcoin down, seeing if it can become new levels of support, but look at the moving averages coming in here, guys. We've got the 100-day and the 21-day coming in to provide that key level of support here. So over the next 24 hours, I'm going to be looking for this to come down to 7,600, which means, yes, it's going to probably deplete a little bit more, but to see Bitcoin come down and have a healthy level of support here and hopefully hold over the next few days and then get a bounce back up and test towards the real level of resistance up here at the Fibonacci level around $9,000. That's really where I'm looking for Bitcoin to head next, again with the optimism in the ETF space as well as talk of Ethereum futures contracts and also the triple bottom in price. I think we've got a decent amount of room to move up in markets, and Bitcoin's got a lot of room for strength with obviously holding such a large level of support over the longer term period here over the past few months. So I think, again, with the RSI being a little bit overextended about a week ago, it was pretty obvious that we needed a correction in this, again having a nice bounce all the way from $5,800. But again, very healthy here. This is what we want to see in markets. We want to see this hold. If it breaks through the 100-day and continues lower past, say, 7,300 or 7,200, we might be turning our heads here towards a different perspective. But at the moment, I'm still remaining bullish. This is looking very healthy on the side of TA. Going on to take a look at Ethereum here, I want to take a look at the Bitcoin comparative because I've been really focusing in on the fact that Ethereum has been showing higher lows and lower highs, building a longer term wedge. Now it is a little bit rough here. We've got some price tending outside of the wedge here, but for the most part, this is looking like a longer term trend for Ethereum, and it looks like it's going to be a great indicator for the momentum of altcoins in this market. Taking a look here, we can obviously see that Ethereum has seen some resistance here back in May and June, and I think it's continuing a downtrend until we reach down towards 4 million Satoshis, a key even level sometime in mid to early August. And the reason I think this is going to happen is, again, we're building towards these higher lows and lower highs, and altcoins, again, are going to continue to lose market dominance, Ethereum being one of them, being the second largest player in the market. But with Bitcoin dominance sitting around 48%, again, that 2% could very well lead towards Ethereum and some larger players getting a depletion towards Bitcoin here. Now, I don't know if we're going to get all the way down there. Again, if we were to see probably Ethereum test around 4 million Satoshis, in this case, that would mean Bitcoin dominance is going to rise much faster, or Ethereum is just going to lose a pretty steady amount of dominance in the market. But my general figure here, until we find some key support, maybe here at 5 million Satoshis, is that we're going to reach down to this level. At the moment, it looks like it's continuing to sell off. Altcoins aren't looking too optimistic, but I have been making some additions and some trades. I'm feeling a little bit more comfortable at these levels. Going on here to take a look at some other players as we wait for Ethereum to test towards those lower levels at 4 million Satoshis. I want to spend some time to focus in on Ripple. Ripple has continued the downtrend and looks like it's going to continue to break down. At the moment, it's holding here, and again, we've seen in the past Ripple sometimes can have some slight signs of resilience, but I think, again, we are continuing the downtrend towards a much lower level, around 40,000 Satoshis. I've been keeping my eye on this for quite some time. And again, historically speaking, guys, I really want to emphasize this. Even though we are in the oversold region for Ripple here, not only have we seen that in the past where it continues to decline, but for the most part, Ripple and other altcoins really do well during short periods of time. You're not winning if you're holding Ripple for the mass majority of its price history. It's during very short periodic periods such as back in December and January. So again, I'm not going to be eager to buy this until I start to see a serious rebound in key level of support, which we have not seen yet in Ripple. We haven't seen any serious volume. Now, I know I'm on Bittrex, but even on Binance, volume has definitely kind of tampered down here on Ripple. Going on here as well to take a look at some of the market players. We also have Bitcoin Cash. I think, again, you have to wait until Bitcoin Cash comes down to 9 million Satoshis, not touching it until it shows that it can hold some support. But again, not getting too eager on a lot of these market leaders. Same with EOS as well. I think EOS, the fact that it's broken down below the 100 and 200 day here on the price, as well as the 21 day, that this is going to come all the way down towards around 60,000 Satoshis. So not getting too eager on this one. And going on to Litecoin. Litecoin has probably got to be one of the more interesting ones for me at the moment. I think Litecoin has finally gotten into the zone where I'm feeling comfortable. We've hit the big even of 1 million Satoshis. But for me personally, with Bitcoin having a nice short-term correction and looking like it might hold support and move higher over the next few weeks, I think that you could see Litecoin come generally down towards around 800,000 Satoshis. Again, this is the range where we can start to get a little bit more optimistic, but I'm not going to jump the gun here. I want to start to see some volume and some buy-side action before I get too eager here. And with it down below the 21 day, we can obviously see that momentum is definitely not showing in this player at the moment. It's not showing in Litecoin. We definitely could see a lower test of the range of 800,000 Satoshis. Going on to take a look at a few of the players here. I want to go through some of the trades that we talked about here in the market. Courtchain has obviously been one that many people have been talking about. Courtchain's still generally up in the moment, but has started to roll back over here over the past few days. Now, to let you guys know generally where I stand on the trade here, I not only got my first part of my trade closed out at 1,000 Satoshis. It was my first actual stop limit here, where I actually got locked out of a quarter of my trade. But outside of that as well, I've gotten stopped out of the rest of the trade here, and the reason that is because the price has rolled back over. I'd raised my stop here towards around 900 to 950 Satoshis, and in this range I got locked out of the rest of the trade. And I think it's actually probably good that I did, even though I was hoping that this would test towards higher levels, and still could very well see it, I think, over the next few weeks. The reason why, though, that I got out of this position and my stop got triggered is because not only has the market obviously started to turn back over, but along with that as well, we also have to bear in mind that the court chain supply, and this is something that I've been critical about since the ICO, I just figured out the other day, is having a release over the next few hours. I don't know if it's hit yet, but it was supposedly supposed to be on the end of the month. And in this case, because of that, I had actually closed out of the rest of my position because my stop got triggered. I don't know if this is going to continue lower because of the lockup, if it's happened yet, or excuse me, the unlock of the tokens. But again, it's something very important to understand because there's drops of around 10 to 20% on a monthly basis of the tokens, and that does affect the supply of the market. So going on here, let's take a look at a few of the other players here. Komodo to Bitcoin. Komodo, I'm looking to see if it's going to hold around 18,000 Satoshis. If it holds there over the next few hours, might get eager on this one, might make a trade, but I'm waiting patiently on Komodo at this point. Now it is in the buy zone for me personally. It's under it's under the level where I feel comfortable buying, but at the same time, if this is going to not be able to double bottom and actually double bottoms and breaks through, then I'm going to actually wait patiently on this one and see if this is going to go towards lower levels of support. So still waiting patiently on Komodo, as well as our large giant in the space that we've been watching, NIM. NIM has still not gotten down officially to 2,000 sats, and in fact, I think it could test a little bit lower than 2,000 sats. Again, we've seen in the past that it had a fallout to the price range of 2,000 Satoshis. I'm going to wait patiently on this one until we get a little bit of a sale on NIM. I think this one is definitely interesting to watch around these levels, but I'm going to remain patient on it. And again, much like most altcoins, it's favorable to wait until we start to get the momentum here, until we get towards the altcoin trend, until we get towards the bull run in alts, which we have not hit yet. So going on here, guys, now that we've taken a decent look across the crypto markets at the moment, there's not too much trending in news. I'm going to try to stay away from talking about the ETFs. I mean, obviously, we're not going to be hearing much until September for most of the ETF proposals, and as well as August as well. We do have some ETFs proposals waiting until then. So the reason I want to spend a decent amount of time focusing in on U.S. equities, and more specifically the large tech plays on the NASDAQ, the FANG stocks, Facebook, Amazon, Netflix, and Google, is due to the crazy amount of sell-side action we've been seeing in some of these larger players over the past few weeks as they go into reporting earnings. We've not only seen Netflix drop down double digits, but recently saw Facebook drop all the way down 25% in a single trading day, wiping off $100 billion of valuation. So rightfully so, this has left a lot of investors worried, concerned that these well-performing tech stocks might be towards their end and that we might be hitting a FANG over, the end of the rally for these large companies. But again, without jumping to conclusions here, I mean, we can obviously see in the price has been relatively negative. This is a massive gap in price for Facebook, and we've also seen the same with Netflix as well. But at the same time, even though we're below the 200-day, even though this has definitely been a big down day in regards to price, as well as the largest day of trading volume that we saw on Facebook since all the way back in 2013. I want to be fair here before I jump into the negative side of things. To be fair, equities markets have been doing quite well over the past few years, and the FANG stocks have been leading performers. So we're really only down back to where we were back in April during a little bit of the stir up from the Cambridge Analytica mess. So because of that, I'm not trying to say that, the tech investors in the traditional equity space have been blown out or anything. I want to spend some time to talk about how this is a very worrying sign and how traditional mainstream media is yet again trying to brush this off as something normal, when in reality, the correlation that they give has nothing to do with what's really going on under the surface. It's something that we've been talking about for a very long period of time, not just myself, but a variety of other market analysts and people in the precious metal space, predominantly Lynette Zhang. She's a really good precious metals expert. And she's been talking about the same exact thing that so many other people have been talking about. But before we dive into that real reason, let's talk about what the mainstream media has been saying. The mainstream media has been saying that for Facebook, the reason that we dropped so much, a whopping 25% after one quarterly earnings release, was due to the fact that in their earnings report, they were brutally honest that they were heading towards peak global capacity in regards to user acquisition. Generally along the lines that, there's only so many people on the planet that we can reach, and because of that, our market is getting close to becoming limited. Facebook, however, though, has realized this for quite some time. It's the reason why Years ago, they acquired Instagram and attempted to acquire Snapchat. And the same goes for Amazon and a lot of large tech companies. This is something that's been well known for a while, and it's why they go to other different brands and markets to try to gather user attention and opportunities for revenue generation and profit. So I don't think that that's the reason. Again, the media always tries to provide some type of rationale that is, in a sense, relatable by the average investor, something that's very visual. But the fact of the matter is, stuff like that has been priced in forever. So what really is leading towards a 25% reduction in Facebook stock? What is leading towards Netflix as well dropping double digits and leading towards a more bearish tone in the general tech sector of stocks? Well, it's the same exact thing we've been talking about for months. It has been a mix not only of insider selling in these stocks, but that the only thing that's been propping up these stocks is companies using their own capital or borrowed capital to continue buying back shares under the corporate balance sheet. And that is the simple thing. It is stock buybacks that have been propping up this market. And we've been seeing a very, very deadly trend as insider selling has increased. And for those who don't know, insider selling is something, it's not insider trading. It's insider selling from people who work at these companies. So, for example, from Mark Zuckerberg all the way down to major funds and people who are related inside the company, we get to have a public record of the massive buy and sells that these individuals go through doing. If they sell a massive chunk of Facebook shares, or they buy a massive chunk of Facebook shares, we get to see that. It's something that's been in place since 2008. You can look it up yourself. You can look up insider trading for Facebook, and you can get the data right there, right on the NASDAQ website. But we've been seeing over the past few months an extensive amount of insider selling, yet at the same time we haven't been seeing that reflected in price action. Why is that? Well, because again, they've been using the corporate amount of cash to simply go in and just swamp in huge massive buy orders of shares as they start to liquidate their holdings. And again, this is a very, very scary trend. It should scare us to a very large degree because this is not a healthy functioning market. This is completely artificial. And we can start to see that we're dealing with billions of dollars in this case. So we can see here, this is a really good summary from obviously one of my favorite websites that does a chart of the week, where they're basically showing the correlation of corporate buybacks as well as insider selling. And I love this paragraph here, so I'm going to read through it. Corporate insiders are selling stocks at an increasing level this year, $17.5 billion in May and June, according to TrimTab's investment research. At the same time, corporate buyback announcements are at record levels. This has been mostly due to the fact, just to let you all know, of the recent tax cuts in the U.S. These companies obviously produce a decent amount of capital. They make good profit, but at the same time, a lot of that has been at the fact that they've been able to get more of that income due to tax cuts. And we have, over the past few years, opened up the ability to buy back shares. This used to be actually something that was restricted to a decent degree. But with the tax cuts coming through, there hasn't been any restriction on this. Because of that, we've been averaging $5.1 billion daily on buy-side volume in stock buybacks. Think about that for a moment. $5.1 billion of purchases on a daily basis this year have been acquiring equities. That's extremely scary. That's extremely false, and it's extremely artificial. So again, this is even far greater than the $3.2 billion daily that we saw back in the peak of 2007, whereas that was the last peak of traditional corporate buybacks right before, obviously, the inevitable crash in 2008. So what are we seeing here? What are we seeing as there's continued stock buybacks, yet at the same time, a continued sense of insider selling? More selling than buying. It's the exact same thing that we see every single time this artificial tool is allowed to be used. They're using the corporate balance sheet of cash to use it as an escape to sell off their equities at peak value. They're using it as a way to exit the market, to liquidate their holdings and cash out. And you want to know who's going to get hurt? The long-term holders of these tech companies, the employees of these companies. When equity prices start to drop and they need to cover their rear ends, when they need to sell off the shares or ownership of their company, those are the people who are going to get hurt. The people who are going to get hurt are the people working at these companies who have continued to borrow endless amounts of corporate debt. This really concerns me. We've been talking about this for a long period of time, and we're starting to see that this bubble is starting to pop, folks. When you have a 25% drop, and when you drop down below the 200-day moving average on a beat on earnings. Let's remind that here. Again, sometimes you can win on earnings and you have a drop, but you rarely ever see a 25% drop when you beat on earnings. Same goes for Netflix here. Again, you don't see these types of drops in price action, these massive gaps and massive tracks of volume on a single trading day, especially when you're beating on earnings. It doesn't make much sense. And we can see even as well, Amazon, which hasn't had as much of a steady drop, pretty much completed an earnings quarter where they beat out earnings 2 times on what was expectations. And look at the price, no uptrend. And we can see as well with Google. Google, from last time I checked, I think had a slight, they actually lost on earnings in this case, but gapped up and have now closed down on those gains right back down to where it was before. Okay, this is starting to show some serious signs for the most part across the major tech plays. But I want to talk about something that's outside of the FANG acronym. Sometimes people toss it in as a secondary letter, the letter A in the FANG acronym, and that is Apple. Apple, later on this afternoon, is going to report quarterly earnings. And I can be fair with you guys in saying that I have no idea what they're going to report, and I have no idea if the market is going to find it valuable. But I can tell you that in a sense of game theory and odds here, I can tell you I would not want to be a shareholder of Apple personally, because not only has the momentum of the stock started to show signals that it's overexhausted, but we've not only had a double top here, but take a look at how the FANG stocks are performing. Take a look at what Facebook and Netflix are doing. If Apple falters over here, one of the largest tech companies on the entire planet, if this drops 5 or 10% on quarterly earnings off of missed iPhone sales or, slow or stagnant growth, this is going to be extremely concerning. So again, it's coming in later in this afternoon, July 31st. We're going to have to see what happens. But again, I can tell you guys, as we've started to see the effective funds rate, the Fed funds rate for borrowing capital continue to rise, I think that you're going to see less stock buybacks supporting this market. When the companies run out of capital to keep on propping up the stock, as Apple and all these major companies have committed massive billions of dollars to propping up their own stock. When this starts to dry up, the artificial buy-side action ends, and you only start to see the sell-side action, the insider selling from the people who work at these companies, from the hedge funds, from the smart money. Again, we've been seeing the smart money index outflowing money. So again, I can't emphasize it enough. I'm a little bit tired, guys. I took a long flight back from Bangkok here to the U.S., but hopefully you can see it in my voice and the way I'm expressing it here in the video. This is definitely not healthy price action. And I got to tell you all, I don't feel it's going to end very well for Apple here over the next few hours. But we'll have to see. Let me know what you guys think down in the comments down below. Do you think Apple is going to perform well in earnings? Do you think it's going to follow the opposite direction, or are we going to see a continuation and decline for the tech sector? And also, what do you all think about Bitcoin at the moment? Do you think that Bitcoin will be able to hold on the key level that we've been looking at around around $7,600. Let me know what you all think down in the comments down below. But until the next video, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.